Good morning, folks. Welcome back to another calm, relaxing day in crypto. Glad to have you. If you like this content, please do hit that like, subscribe button. You know how to show the love. Today, we're going to be talking about Ethereum and looking at the fair value, where we're at, similarly like we did yesterday, but this is going to be slightly different. I'm going to dive into a bit more thoughts on where we might be trading, what's happening also on the US dollar front, which does give me some indication of where we might be heading in the near term for today's trading session. And looking across a bunch of standard charts and standard views on the asset in question. So let's dive right in. Ethereum's fair value, similarly like Bitcoin's that we discussed yesterday. So this is again essentially the median line, which we're assuming does follow a linear regression model of growth like Bitcoin. There are reasons for this assumption that we can go into in a later video, but let's assume that it's approximately true and a decent indicator for various reasons. And the first thing that we have to realize about what this fair value line measures is it's attempting to find the point in which, over the time of since inception of Ethereum, in this case, where the price value would fit, if it fit exactly or very, very closely to exactly half of the time where the price value is within a bullish bubble above and half the time within a bearish bubble below. Right now, of course, we hit all-time highs on several occasions recently. Actually, we've been hitting all-time highs for the past for the past approximately year. Let's just put the correct date there. Yeah, we've been approximately a year now in a bullish momentum. And we can see that in the charts. And we can see that when the price passes through the fair value, boom, it tends to hold it then as support. When we're in some cases here we had a little bit of a point in which we actually did cross it, but we failed to pass through it with any commitment or with any bravado, and we came back down. But once we are above it, we tend to hold above it for some time, and that's when we see mass gainage. We had a similar situation back in 2019 where we tried to get over it, but we just simply failed, and boom, we come right back down. And it's at these points in the chart where, if you think about the way the market works, or my understanding of the way the market works, and the market makers out there who are trading on a day-to-day basis and thinking in the long term, they were generally taking profits in this area. Any long-term holders in any of this range also would have been fat, happy cats taking profits along these ways. And if you didn't take profits while we're moving up, take notes, because that is the problem. We must take profits as we're in a profitable trading position. You must. Otherwise, once you fall back through that fair value, you're stuck. Look at these. Look at these long periods in which we sit in these bear markets. And that's what everyone's afraid of right now. Everyone's exceptionally nervous. We can see that we tried to bump through it when we were in the bear market, and we failed. And there's a high probability, in my mind, that what's about to happen is that just the opposite. We're going to tease the hell out of everybody trading in this type of range before we move back into the full-on hike cycle. Right now, there's a lot of headwinds against us. There's no reason to believe we're going to immediately start popping off again, but we still can save the day and hold above. If we look back at this stage, this was a, what is that? Almost 2-year bull cycle. Boom. Massive, massive gainers every single day. Green candles across the board. Boom, boom, boom. More than plenty of opportunity to profit. And here, this has been an actual pretty pathetic move. We do expect, given the logarithmic growth curve, that the overall price growth over time will be diminishing. I believe we all agree on that. Okay, there is volatility within that movement, clearly, but we can see that once we're in that space, we tend to stay there for a while. And we've only been there for 385 days, just over a year. And if we think about the past experience, then we can see that actually, there's a high probability if we repeat a similar pattern in the past. We still have, for Ethereum's just getting started. This could be exactly the move we needed to start pushing us forward. We have to watch it closely. Everybody keep your eyes on this value. 2,300 is approximately where my fair value line is today. We can see that, by the end of the year, we can expect a 5,000 ETH fair value. By the end of 2000, that's going to be right around here. So approximately here, we're looking already at a massive gains. Okay, even if that range is still like somewhere in here, right? Ethereum growth is just beginning. So if you're suffering right now because of this obviously painful 50% pullback, well, have some perspective. We're moving in the right direction still. Pull back on your leverage when you're in the profits. Trade down, sell out, move with the market, be smart. When you're in the profits, take profits. That's the message of the day. Buy when we're moving down. And how do I get rid of that? Yep. Okay. Buy as we're trending down. We need to get that into our heads. Accumulate on the down. DCA in, dollar cost average in. Buy 0.01 ETH a week. Boom, 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 boom. You'd still have 5 ETH by then, 10 ETH by then, depending on your investment capacity. And then you would be in massive gainer town, even with the 50% drop right now. That's the way that this works. This is your island money right here. This is the money that you're saving, that you want to make work for you. Okay? These cycles do exist. You're not going to be able to stop them. Embrace them. Message of the day. Fair value, 2,300 still. We're above it. That is very, very on the edge. But if we can maintain this type of projection, then we'll be feeling much better very soon, assuming you don't make the same mistake and fail to sell when we're in the hype phase. We might be entering a downturn though, and we can expect a year. I mean, this is essentially a W pattern, right? Boom. We can expect a year before that W pattern play out. Be prepared. Have cash on hand. If we start moving down and can't break the 2,500 level, then you know where we're at. We're above right now on the DXY. The dollar, if you look at the correlation between the movement of the US dollar and Bitcoin, as the dollar is losing value, boom, the Ethereum is gaining value. People are moving out of the dollar. They're selling their dollars and buying other assets like Ethereum, like Bitcoin. You can see the same movement in Bitcoin as well, even stronger. And so right now, we've been in a steady incline of the... we've been in a steady incline for the dollar, and especially as of late, even though it looks like we've been going down, we've actually just been trading sideways. And we do have, in the past days, weeks, we've had a strong move in the value of the dollar increasing. We went from 94 to almost 97, and we are hitting a triple top here. If we look, boom, 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 1, 2, 3. Absolute crucial moment in time right now. If we break this 96.8 level and we continue up higher, expect a move to the downside. Expect we are going to drop into this bearish pattern. So watch the DXY for movement above its current position, because we are at a very critical level. And this level also, in fact, has been critical in the past as resistance and support. So it's no coincidence that this is where things will be, people will be watching this number here very closely. And if more people start pushing their money back into the US dollar, that means they're taking it away from other assets like Ethereum. So let's look at the order book. So this is Trading Light. We get to see exactly where people's money is being put into the market, into the order book. So these are blocks of orders where price at the given range is a limit order for the amount shown, and we can see that actually there's not that strong of commitment right now. It looks very, very much like people are on edge in the market in terms of, at least on the FTX perpetual exchange, which to me, especially this, we were watching this before, this huge block, which just disappeared before. It did not get taken out. I mean, this block here did not get bought up. It got removed, which indicates to me a spoof or a panic, a change of opinion. And we saw immediately following that a massive drop. So when we can find whoever is managing this type of or this order here, because this is clearly a single block of orders, all controlled by a market maker out there taking orders and on a large scale. When we start seeing them show up again below the current prices, and price dumps into that, takes it, and bounces out, then we know we have really built support. This was false support. This was a wall that was intended at the time perhaps to act as support, but then there was a change of heart and they clearly knew what they were doing. They might have been slowly adding back in. That looks suspiciously similar, right? They might have been slowly adding back in here. So we might see a fake out. They'll take profits up here, filling in this VPR here, this gap. There's a massive gap. If you look in the chart here, you can see that there's a lot of trading here. There's a lot of trading here. And in this area, there's a lot of liquidity that can be absorbed still. And you can see this one huge liquidation cascade that we've experienced just in the past week, basically. Now, what we're looking for, though, is where are the next moves? We're going to move over to so this is futures, and we're going to move over to Binance spot trades. Okay, we can see some orders coming in, some nice orders coming in there. Let's go ahead and move this down. So we're going to peek. We're going to show the yellow lines mean there's 1,500, and we'll clear out some of these smaller. So 200 ETH. So black is anything under 200 ETH on the order book, and yellow is anything above 1,500 ETH. So we have tens of thousands of ETH in this zone here between 23 and 1,000, right? That's a huge range, and we will not be happy campers. But unfortunately, okay, if I'm looking at this and I'm talking to myself out loud here, where are we going? Where does the market makers want to fill their orders? Well, they have orders on the downside. Boom. Be ready for these moves, right? And this is of course only over the course of the next whatever week. It will not move. It's highly unlikely that it will move that fast. So we're more likely to be filling in the gaps across a larger time frame. And we can see, okay, if we take a look at the higher time frame here and go back all the way, to October of 2020, we can see that the majority of trading happened here, right? Boom. This is point of control, this area right here. Specifically, this midpoint right here is point of control. Boom. So anyone who's in this massive block, this is where most of the trades, even if we're only looking, so if you see that the trades that occurred here only take up whatever, from December to October, there were more trades made between October and December. So October, November, December, 3 months in this zone here, there were more trades of Ethereum made in that time than there have been in this entire time since then, an entire year. Okay, so put that in your head. Those people who were trading back then, who built the support and gave us the momentum to move into the bull cycle that we're in as of right now. I consider ourselves still in the bull cycle, as we have not committed liquidity under the fair value at this point. Still, we have not crossed back over this zone where that commitment was made originally. We're still in the bull cycle, so we're still moving. We're trending up. If market makers are out there right now, they're still, or anybody who bought during this point, which is going to be market makers, they're the ones pushing these large scale orders into the books. They're still happy because they were taking profits. They were taking profits. Boom, here, shorting, boom. We got this move. These are the type of moves which they love because they're taking all the excitement in the market. Oh, retail, all the news, fear and greed. Oh, we're greedy. Everybody's in. Get in. Market, your bells are ringing in your phones from all the different exchanges. Hey, market's moving up. Buy. And who are you selling to? Who are you buying from? You're buying from market makers who are selling you their shorts. Bam. You get liquidated. W pattern here. Moves on up. Steady. Again, people are like, oh God, it's perfect. Wow, the market can never end. Boom. Start shorting. Nope, not going to work either. Get liquidated. Then the real move starts. It's a really good M pattern here to turn us around. If you only look at W's and M's at the larger scale and the shorter scale, you can find what's happening. Market makers are doing this for 100 years. I don't even know when this New York Stock Exchange opened or the first equities markets were formed, but I think it's been 100 years or so. This is a job that people have perfected. They're doing the same patterns over and over and over. There's always points in which you can count. Three hits, reverse. 3 hits, reverse. Remember that pattern. Let me see if I can move this. How do I move this? Okay, anyways. So right now, what are we trying to form? Well, we are forming a nice a very nice new, I mean, there is a very high potential for a new point of control in the chart, in this range even. So we can, maybe we should expect a move down to about the $2,000 to $1,800 level still. Why wouldn't we expect it? We are in the downward trend. Nothing has given us any indication that we're in any other trend than down. And if we wanted to build that as the new support, well, we come down, we'd probably do some sort of W form, and then we can continue forward, right? We would feel the pain of the market. Everyone will go back into, will continue into panic mode. And given the quickness of movements these days, maybe this will only take another month, 2, 3 to complete. Maybe by spring, we'll be back through all this garbage and moving towards the upside again. Maybe. Or we'll have a lot longer to wait to get through, and it might be until summer, end of summer, before we can really start heading back towards getting ourselves above the fair value. If we look at another trend indicator that I like to look at in terms of candle momentum, we can look at the Haikanashi chart and note that we continue to be in a down on the weekly. We continue to be in a nasty downward trend. And it doesn't look like the candles are getting smaller. Usually it requires that we first start getting smaller and smaller candles. We have a little top hat, a little spindle top before we can turn off. And we're not even close. So given this, if we expect gainage, it's gonna take some time still to pull out of this very strong downward momentum. We can see that on the daily, we are ready for a small little pullback. So keep an eye on this because we are due for a pullback to the upside. We have not had a pullback in a very long time. We've been in a consistent downturn with tiny little pullbacks. And that's, maybe all we're going to get before we continue back down, as I pointed out, all the way to the 2,000, 1,800 level, right? This, if we take what I just said earlier, if what I was saying becomes true, we're still heading down towards the 1,800 level, which obviously the Haikanashi candles are not actually priced the same because of the way that they're calculated. But the point is that we have still a ways to go down before we can necessarily be sure, or we potentially have a ways to go down before we can say that we've hit the previous support levels that are clear in the VPR and align with the fair value. One more thing to look at here: Bitcoin dominance continues to trend down, as we all know. Ethereum dominance continues to trend up. As of the most recent moves, we hit an all-time high, and now we're moving down. So watch this break. It might break to the downside, which would mean Bitcoin will be pumping, or it might break to the upside, which means most likely in this case it means Bitcoin will be continuing sideways and giving room for massive gainers for Ethereum, which we would all love either way. But if Bitcoin continues its price movement to the downside, we can expect actually Bitcoin dominance to rise, because this is the core asset that people will be primarily investing in terms of institutions and large players, because that's where the liquidity is. What do we got here? What is the US dollar dominance is growing as well, which shows, again, that's similar to the DXY, but in crypto space. So as DXY, as the US dollar, as people are trading out of their crypto, they are dumping into various US dollar stable coins. And you can see that as US dollar stable coins dominance is going up, well, we see everything else going down, right? Except in this case, ETH was actually doing pretty good, but more going sideways. Generally speaking, this is not a good sign. It means people are preparing or liquidating and selling out their positions, waiting for lower prices. On a day trading basis, well, if we look at the candles on a 4-hour time frame, we can see that the volume yesterday evening. This is as the Fed announcement was happening. This was New York Open. New York Open stop hut loss pushed the market up, only to reverse it out and cause massive pain. Right? This is when the market opens. Everyone's excited, thinking, yes, the market's moving up. Market believes that, retail traders are like, market believes this is good news, good news, good news. But what you're really doing is selling right into the shorts. This green candle indicates a higher volume of longs being purchased. We hit the pivot points, important pivot points in the chart, and right at that point, which is also the midpoint of the previous, one of the larger previous liquidation candles here on the downside, we tapped it, turned around, went back. Purple indicates a possible reversal. So this is when volume is going in the opposite direction. So as things are going down, people are shorting at a higher volume than average. And we often see exactly what we're seeing now. That's where the reversal happens. And we'll have to wait and see how the Asian market responds today still. We can very well see an M pattern form here. This could also be a W pattern that gets formed over the next, essentially the next few days, then move up if we want to recover any of this liquidity that was left on the table after the previous downturns, and that would be pushing us into a potentially larger pattern here of a W, or let's say here, right? So if we can, here's the level I'm looking at. As I'm talking out loud, I'm trying to figure this out with you guys as I look at the charts. So 2600 is going to be the point in which we make a decision on the upside. If in order to confirm this as a W pattern, which we actually can trust to not break down in a high probability, we need to go above it significantly, maybe 28, recover some of this, hit some of those bottom points where the previous resistance in the chart was, before we come back down, retest, prove that this is support and that market makers want to mark up price again, then we can move forward. Otherwise, if we do a little M pattern here, bounce off the previous resistance, which has proven resistance. This is shown to be only, as of right now, it's a point in which market makers are able to collect higher prices for their shorts. But this is a counterintuitive move, because then they immediately took profits on their shorts, it looks like, and they might want to continue moving it up. But if they don't, if this is just still one long downward trend, we should expect to see 25 bounce, daily open, move strong move back to the downside. Who knows how far it goes, but we could see probably 2,000, 2,100 type targets, which is where we saw in the past hold as support, and that would prove to me that there's a larger W in play. And this is the point of interest for me. So target 26, 22, massive range. Make sure that you're not getting liquidated in these small little bumps. Be careful out there. See you in the next video.